Alright traders, welcome to another video. Like to take a moment here. Today is Good Friday, so just want to take a moment to, as a Christian, give thanks to my Savior Jesus Christ, because today is the day that we celebrate the day that He laid down His life for us and sacrificed His life for us so that we can have an opportunity for forgiveness and eternal life through the belief of Jesus Christ our Savior. So just want to give honor and glory to Him and thank Him for what He's done for us and all that He does and continues to do behind the scenes and in front of the scenes. So thank you, Lord. All right. So we want to get started today. We're looking at some stocks today. Just going to look at two stocks. Going to look at Ford Motor Company right here, as you see. And then I'm going to switch over. I'm going to look at GE. All right, GE, General Electric. So I've been looking at both of these pretty much. GE's coming off of 52-week low, which is a good thing here, maybe. But before you do any stock trading, if you're a technical trader, I do believe that you should have some fundamental analysis in your trading, because what you want to do is basically what you would call stock valuation. So that's going to be like where you're calculating theoretical values of the company to predict the possible future market values. And this process will help you to get an understanding of the future market prices, which could help you to decide if you want to invest in that stock or if you do not want to invest in that stock. So it kind of helps you to understand where the future might be. Now this is all analytical stuff, so it's not all going to work that way. All right. But basically you'll have to look at if you're going to be more of a longer term trader. So if you're more investing and you're using you want to use more things like your balance sheets and stuff like that. So you'll get into more looking at more of the stocks ratios and stuff of that nature. But today we're just going to look at the stock quotes to understand a little bit. So when you look at a stock, you want to be able to understand the quote that you see so you can understand if you even want to purchase or look at trying to trade that stock. All right, so we're looking at GE and Ford. I'm going to look at Ford first. Okay, GE I like a little bit better, but when we look at some of the ratios and stuff of that nature, you may see that it's kind of weak and it's been trending the wrong way for us. So we're going to look at Ford first. Okay, so we're going to go to the stock quotes and look at that. So let's go look at the quote. I like to go to NASDAQ.com. and I look at the quotes they have there, and they have other things that you can use also. So if you want to get even deeper into the fundamentals of the stock, you can use a lot of the assets that they have there. All right, so let's go look at these quotes, and then we'll come back and we'll look at the technical aspect of the chart. I'll talk about this OBV, why I'm using it, and how you use it, and what I'm looking at with it. All right, so let's head on over to the stock quotes. All right, traders, so we're looking here at Ford Motor Company on NASDAQ site. I'm going to just look at the basic stuff that you see here on your stock quote and explain each one. And I think, like, when you, as I said previously, when you're getting ready to trade a stock, look at that stock quote and understand some of these things here. All right, such as your EPS, your PE ratio, and stuff like that. But I'm going to go through these really quickly, and some of them are pretty basic in understanding. So this is what their current price is. All right, and then you could see when we start looking at this, the 1 year target is an analyst target. What they suspect that the target price will be within the next year. So currently it's 11.08. They're believing it'll be 13.5. And then you see today's high and low, so that's pretty common. Your share volume, all right, these are traded stock, traded shares. All right, so that's your share volume. Your 90-day average volume, so this is the average shares traded within 90 days, so that's the average. You'll get 44. So you see the average is higher than what today's share volume is. And then the previous close was 1086. All right, and then your 52-week high and low, it shows you 52-week high and low. So that goes, not counting this current week, 52 weeks past this current week, not counting the current week. So you'll get your high and your low. So that's a very important level that you're going to see on the chart, and I'm going to talk about that because sometimes prices coming off of those 52-week highs or lows, those are levels where the market really needs to talk to you. It makes a decision there. So at a 52-week high or 52-week low, when price reaches that level, that's where the market, you'll start to see interest develop either to the upside or downside depending on where you are. So if you're at that 52-week low, there's a lot of traders that would be looking at that to trade that level long because they're looking for the market to bounce off of that level. But then there's also the side where if you have momentum going into that 52-week low to the downside, that you may stay short on that stock, or if it's 52-week high going into the 52-week high with momentum, you may look for that breakout, all right, rather than looking for it to bounce off of that level. And so that's very important. So then we have market cap. This just tells basically how much what the value of the company is, how much the value of the company is basically. So market cap, the stocks are based in off of 3 different market sizes, which would be your small cap, mid cap, and large cap. So a small cap would be under 1 billion, a mid cap would be 1 to 10 billion, and then the large cap would be over 10 billion. And you could see Ford Motor Company is over 10 billion. So they're a large cap market. Then your PE ratio. This is one that a lot of traders look at and believe that it's one of the most important things here. It's your price to earnings ratio. And like I said, it's widely used as one of the main valuation tools when traders are analyzing a stock. But the PE ratio basically just tells you how expensive a stock is. So company with a high PE, they're more likely to be considered like risky investments than the stock with a lower PE. So when you're comparing stocks and you look at the 2 PE ratios, you want to look at that. All right. So when you're comparing them, you want to make sure they're pretty much in the same sector. You don't want to compare stocks that are different. All right. So if you look at if you're looking at 2 stocks and one has a higher PE ratio than the other, then you may start to say, well, the one with the highest PE ratio might be a little bit riskier. But that still, the PE doesn't really tell you, basically, in my mind, that it's better to choose this stock or not. There's other things that you have to take into consideration. All right. So then your forward PE is just basically an analyst's measurement of where your PE ratio is going to be a year from now. All right. Also looking at that earnings per share, your EPS right here. This is your EPS. So to me, EPS is one of the bigger things on this chart that we should be looking at, along with beta. I think those are going to be a couple of the big things that you look at. Beta is going to be important, and so is your EPS. So what your EPS basically is, it's important because it indicates the profitability of the company, right? So you don't want a company that's not profitable. All right. So your earnings per share tells you the profitability of the company. It's calculated basically by dividing the company's net income with its total number of outstanding shares. Okay. So the higher the earnings per share of the company, the more profitable it is. So again, when you're comparing 2 companies, the one with the higher EPS is more profitable. But again, remember, you want to compare in the same market. All right. And then you have your annualized dividend, and it's the amount of a dividend paid to the shareholders over basically, this one is annual, so over the year. So the dividend is basically, it's just a payment made by the company to the shareholders, to people that hold shares of stock, and it's usually as a distribution of profits. Okay, so that's what your annualized dividend is. Your ex-dividend date, this is the date that you have to be had purchased the stock prior to that date. You can, not that date. So if you purchase it on, here it's showing 1/29/2018. If you purchase the stock on that date, then you're not entitled to the dividend payout, which is 3/1/2018. But if you had purchased it on 1/28, then you are entitled to that. And so the dividend payment is just the date that the dividend is going to be paid out. All right. The current yield. So the yield is the amount of money that the company pays its shareholders each year, and it's as a percentage of the current stock price, really. All right. So what you basically would do is you would take your annualized dividend right here, and you would divide it by over 1108, and then multiply it by 100. All right. So 0.60 and divide it with 1108, and then you would multiply that by 100. So you would always multiply it by 100 to find out what your current yield is. Now when I did that, I got like 5.42 or 41. I was not the same here, but that's the way that you figure it out. All right, and then the beta is going to be the stock's volatility compared to the overall market. So the overall market beta is like 1.0, okay? And stocks are ranked according to how much they deviate from the market. All right, so you want a stock that is closer to 1.0 is going to follow the overall market pretty well. All right, but a stock that's lower or not as will not follow the market as well, basically. So you usually want a stock that's 1 or lower because it'll follow the market more closely, right? So stocks with lower betas are going to be like when the market makes a big move, they'll remain fairly stable. But if the market drops pretty hard, then the decline of the stock is not going to be as dramatic as the overall market. And then vice versa for stocks with a lower beta. All right. So that's what you look at. So those are some of the things you want to keep in mind, and it's important to know those. So you want to, if the company is not profitable, looking at the EPS, then that's one thing that may keep you from even going back to the chart and saying you're going to trade it or not. All right. So let's look at the we're looking at Ford here. So let's look at GE real quick, and then we'll go back to the charts. Okay, so here we are with GE. So a couple things stand out really quickly with GE right off the bat. You could see this earnings per share is negative 0.72. So that means the company is not profitable right now. That's a big thing when you're looking at purchasing that stock. All right, and then also you can see the PE ratio is negative, which is not a good thing. So looking at this stock and you comparing it with other stocks, it may be one that you don't even put on your list. All right. Now it does tend to follow the market kind of closely. All right. But other than that, it may be one that you disregard. Now, when you go back to the chart, you're going to have to decide, so that's why you look at some of the fundamental aspects of it. That's how come you want to do the stock valuation, instead of just jumping into a chart that you see and saying, oh, I'm going to purchase this just because I look at the chart. You also want to know if that company is profitable or not. Now, there could be reasons why you have these numbers, all right, and it could be good reasons. Sometimes it could be depending on what that stock is or what sector it is in. It could be based off of the month where it may be more profitable due to, like, it's more profitable during the summer months than the winter months or something like that. All right, but we'll have to look at, you go take a deeper look at that when you're really analyzing the stock. So for our purpose, we're just analyzing the stock quotes, the main things that you see on the stock and what you should pay attention to. And basically, if you're comparing those against another stock. So I'm not comparing GE and Ford. I'm just looking at both of those. So I'm going to go back to the charts and look at GE and Ford, and then we're going to talk about should we get into a trade and where we should look at trading. All right, so let's go back to the charts. All right, so now back at the charts. Now that we've done our basic um, fundamental analysis, basically, so we did our little bit of stock valuation. So now we're going to look at the charts and use the technical aspect. And so what you see on my charts, you know that I trade Ichimoku most of the time, so that's what everyone sort of knows me for. But I'm more than an Ichimoku trader. I just want people to know that I'm a trader. Basically, I trade the markets. All right, I understand the market. I don't just understand Ichimoku. I couldn't trade Ichimoku if I didn't understand the market. Okay, so I have to understand the market and know the market. So I'm not just an Ichimoku trader. I just don't want to get that concept, people to have that concept about me. So on my chart, you do see I do have Ichimoku here. I got it lightly colored, but I want to keep these lines here, which are the your Tenkan-sen, your Kijin-sen, and your Chikou-span, and then your cloud. I don't want my cloud to be overbearing, so that when people look at the chart, that's all they see is the cloud, and they only pay attention to that, and then they get lost and don't pay attention to what the price of the market is doing, because the price is the most important thing. I have traders say to me, well, you're going to take a long trade and your future is still bearish. Yes, I'm going to take a long trade because my price is telling me more than what Ichimoku's telling me. Okay, so that's what that is. So you see on my chart here, I have a couple things. Like I said, I have Ichimoku here, but I also have the OBV on here. So OBV is very good. It measures the running total volume. All right. So when you look at OBV, what it measures, how it measures is like if today's close is higher than yesterday's close, then your OBV is going to be calculated with the previous OBV level plus today's volume, and then you get the current OBV level. And then on the other side, if today's close is lower than yesterday's close, then you're going to get your previous OBV level minus today's volume to give you your current OBV level. So I love to use this more so. We are looking at the volume and seeing if you have volume to match your price levels and at your resistance points and stuff to that nature. But I truly love using it for divergences. And so you could get a divergence like if you're saying, all right, so today's close was higher than yesterday's close, but the volume was lower. It's going to start to show OBV going to the downside while price is still moving to the upside. Now, maybe you're not moving to the upside strong, but that upside movement with the volume dropping, that shows that the smart money is not invested in that move to the upside. So your smart money is more like your institutional traders, you know, fund managers and things of that nature. So you want to be trading the smart money, and the smart money does not signify that that move is higher. So I'll give you, for instance, okay, and I love to use the divergence, so I'm going to show you. There's two types of divergences that we look at. Regular divergence and hidden divergence. So regular divergence would signify that you're going to get a possible reversal, but then hidden divergence would signify that possible trend continuation. So that's how I would use it. So when I look at this chart, we look at these levels. I'm going to use this crosshair so you guys could see. So I'm basically comparing this level. See, when the market gets to this 52-week high, and so I have the 52-week high. I have my high, the 52-week high, and then the 52-week close level, high close. And so when we look at this, this is one level. We can basically go where the high is right here, and you could see that if you compare this level, which is right here, with this level right here, how come price at this point moved higher all the way up to the top here, made this high, but the OBV was showing lower volume? That's showing me that there was no smart money interest in the move higher and the violation of this level, so you weren't more than likely going to have a breakout. So with my trading, I would enter this market. Certain ways I enter the market, but using a lot of price action, but mainly fractals. I'm not going to enter the market on Ichimoku. All right, so we're looking at support and resistance levels here, and then this is where you got the big drop in the market cap down. Now when you look at Ichimoku, you could see you had a big what you call, this is basically Tinkinson and Kijinson together, and then you get a big C clamp. This C clamp is because now this Tinkinson is so far away from Kijinson that the market either is going to do one of two things. It's going to either pull back because here it's out of equilibrium. All right, you have more of one side of the market investors, either more buyers or more sellers. All right, at this point you have more sellers, so it's overwhelming sellers to buyers. So that's market disequilibrium. And eventually the market does have to come back into equilibrium eventually. So a good point was down when you want to look at a big C clamp move is when you see the market at support and resistance levels. So I pay more attention to those support and resistance levels for bounces. Okay, so when I'm looking at this 52-week low here, the market came down to this low with a big C clamp and big disequilibrium. I'm more than likely looking for the market to move off of that level and move higher. Now it took a while here because you got a lot of stuff going on these levels, and then a high percentage of the time the market's going to come back and test these 52-week lows and stuff like that, the highs. Now here you didn't see a retest here where it came back, but a high percentage of the time it will, such as it did here. If you go back prior, you could see it hit here and then it came back and tested the level before dropping really big. So with a high probability, you're going to probably get a test of these levels. Now at these levels, that second test, when you compare them and they're even at that level, that's where you start looking at that divergence. All right, so we had divergence. I'm going to draw it on this chart real quick. We had two divergences, one I showed you previously. Let me show you again. So here's the divergence here where this was going higher, but the OBV was going lower at these two levels, right at a strong support and resistance level. And then you could see the volume was dropping. The smart money was not invested in this breakout, and then the market dropped. All right, and it's not just that simple sometimes, but that's the basics. And then when we come back down here, we see the market at this level, and then the market again hit this level. So at that point we were here and here. This is a divergence because this is going to the upside. So it's showing the volume was increasing, right? And the smart money was invested in the move higher. And off of that second retest, that first retest really, the market came and moved higher. All right, and so that's what you look for. Now you gotta tighten down your entry. So how would you enter? That's a lot of different ways to enter the market, but those are the things that you're going to look for. And you're not going to just enter just because. You got to have a reason to enter the market based off of the price action. Where's the level you want to get into the market? All right, maybe you look at this right here was 3 candles, was looking at like a morning star entry. But a lot of times what I like to do is go down to a lower time frame, which would be the 4-hour, and then tighten in my entry so I get a better entry. All right, because 4-hour daily might have taken this level with a stop loss down here. Now it all depends. You got to make sure your risk reward, that your money management allows you to stay within the percentage of your capital, your total capital. All right, so usually it all depends. If you want to trade 3%, you don't want to be trading 10%, taking 10% of your capital losses, because what if you have 10 straight losses at 10%? You're done. All right, so we're looking at that. At this point now, there is no divergence because you could see here, you can see there, they're both doing the same thing. So there's no divergence. You still have an increase. You still have an increase in your volume. So volume is increasing. And so what I like to do, I believe that prices, since you still have that move higher, and I don't love to pay a lot of attention to Ichimoku when it's flat like this, because if the market stays flat and we see the market range, I'm looking at the market coming back up to this level here at least, and then maybe this point. And so then if we can get to that point, right, then we look for the market to maybe go to this resistance level of the flat cloud here. All right, but you would have thought the market was kind of ranging here. All right, and it was a little bit, and then we gapped out of there, came back into the range, and then now we're moving out. Might see it pull back a little and then go higher, but I think we're going to see that level. Now, a lot of things I like to look at when I'm looking at the market moving out of a level or moving higher. So you look at the 1, 2, 3 levels. So it's kind of flat here, so I can't really get a good level. So I'm going to look at the very first move. So you got 1, 2, this will be 3. You really don't want this 3 coming back to this 2. I mean to this 1, because then we're we don't have the momentum pretty much, or else we're going to just be ranging. So we expect the 4 level to move past this point, or up to this point at least. That's where we expect the market to move, but then we're going to look for a higher level. And so then when you're trading Ichimoku, you could compare this leg here, the length of this leg, and then move it over and make it should be the same level here. That's your observation theory. All right, so you learn more about that with the advanced Ichimoku. I have that in my courses, teaching advanced Ichimoku, how to trade it. It's valuable for stocks also. I use it a lot for Forex. Also use it for stocks. It's good. Now, there's nothing that's 100% guaranteed with any stock or any asset or any rules that you trade with, but you want to have a continual trading plan, and I follow the same things all the time. I do the same thing. All right. So that's what I'm looking at with the Ford Motor Company. Now let's go to GE. We were talking about GE when we looked at GE as far as the valuation. It was a stock that we said was kind of weak. We didn't want to buy it. It wasn't a profitable company at that point. So let's go to GE, look at that. So GE is coming off of this 52-week low right here. Basically just came off of it. Now you could see there was some strong, even when this was trending to the downside, you started to see this OBV moving to the upside. All right, then we got up to our Kijinsen level where we look for a reversal, but then the market wasn't able to violate that level. You could see the volume dropped, the market fell to the downside, the strength wasn't there, the smart money wasn't moving higher than your Tinkinson level here, and now we're back at that level. All right, we came back to that level, but once we got down to your 52-week low here, you could see we had an increased volume. We had a good move off, so you had pretty much a bullish engulfing off of that 52-week low. And then based on the technicals of this chart, we would start to think that we're going to see this thing reverse. A couple things. So let's look at this. I'm going to put a horizontal line right here, because that horizontal line is going to represent this level right here. And a lot of times when you see this, I was talking about hidden divergence. This is what I'm looking at right here, this hidden divergence, where you see this level, which would be this level, this area right here, and then you see this level. This level right here is a little bit lower than this level. It shouldn't even be even with that level. Just being even with this previous level is a divergence, where you see this, if it was even, it should have been like this, but it dropped down. So now that kind of signifies that we may see the market move higher. All right. But what I'm looking at basically is this overall divergence that you see here. When we draw this in, this is regular divergence. And so possibly we're going to see the market move higher. Now the market may not take right off of this level. We may see it range a little bit and then eventually break off of this level. All right, so I'm kind of liking this GE to buy it, just because of the things that you see on the technical aspect of the chart. Had I not even looked at the valuation of the stock, I wouldn't think twice about purchasing it. Okay, let me show you a couple things real quick. Let's go back to this. but really you could see the big divergence here. And you had a divergence here. Now this is a little bit different. This is when I'm looking at continuation. So this is what you're looking at for a continuation move to the downside. So the stock was moving to the downside, and we want to look at hidden divergence. We want to look at the continuation divergence. So you have the hidden and the regular divergence. Regular divergence for a reversal, and hidden divergence for continuation of this trend to the downside. There's some good levels, some good things to look at here. So one of them was when we compare levels, all right, they should match up. So I'm going to compare some levels. Let me draw these out real quick. So looking at this level and this level, that would be this point right here. Now you see more volume, and then you see this level right here. That's this level right here. This is going to the upside, but the stock is failing to go to the upside. The smart money is not invested in that move. Now you do see some volume increase, but then the drop right to the downside. Now we came up, when we look at this, we came right up to our cloud level right here, and then we dropped to the downside. All right, and then we continued to move down to the 52-week low. So that was looking at the hidden divergence here. And a lot of people don't take notice of the hidden divergence, and sometimes it's hard to see. When you see something like this and you see this moving on, you think, wow, this is moving up. It's definitely going to the upside. I'm definitely looking to trade long. But the overall move, the overall stock was in a downtrend. So you're fighting the downtrend when you do that, right? And then so what I'm going to look at here, I like to do this because you already have a level here, but I'm going to put another one so we can look at that. So this stock came up. This was the level of that stock right there. And then as it sat here, and then we saw the big increase, right? So as we saw that increase, 1 second. So I'm losing my voice a little bit, allergies or head cold, congested, whatever. But anyway, at these points, this point and this point and this point, we had the volume, but the market wasn't even reaching this level. So I draw a line to compare that level, because other than that, I may not even think about that. So I see that level, I see the market moving higher. So I want to go back and see why this is higher than the previous levels, and I'll start to mark it, and then we can see we can continue that downtrend. And that was a big one there. And in the whole trend, you're not going to see that many, but even like here, let me mark this. It could have signified to us possible move here. So see this level right here? These two levels are even pretty much right here on the bottom. But now look at this level, follow the line up and see where that level is. Let's even go right here to the point where the fractal was. And then look at the next level right there. We had increased volume, but then the next day the volume dropped off. And then we bounced off of this Kijinsen level in a downtrend. A good sign that we were going to go lower. All right, and the market continued and went lower, and you had a good opportunity, you could trade there. So looking at this stuff, the reason I like to keep Ichimoku on the chart is because it gives me more levels to help me to trade. It gives me a overall bias of the market, but I still like to pay attention to the price and to divergences. But I have levels that I can trade off of, because sometimes you don't know where to get into the market. You don't have a level. You don't see something, but there's certain levels with Ichimoku that I can look at and know that I want to be able to trade based off of those levels that aren't being seen by everybody else. All right, but this was a strong trend to the downside. So yes, you wanted to follow that. You want to look for reasons to stay with that trend to the downside. Now here's where we're looking at that reversal, like I said, and we also said GE was a weak stock, but we're looking at, and it's weak because you could see what it's been doing here. But we may see the bounce here. Now, again, I told you a lot of times you may see a second bounce. So this is the first attempt. It may move a little higher, then come back again. Now, that's not a guarantee, but a high percentage of the time it does come back to retest these 52-week lows and highs. But other than that, that's what I'm looking at with this GE and Ford. Hopefully it helps you out a little bit. I mean, it didn't give you any exact trading levels or anything, but it helps you to understand where you want to trade, how you want to trade, and things that you should be looking for. So hopefully that helped you out. So once again, thank you. Appreciate you guys. Hope you enjoyed the video. Until next time, have a great one. God bless. So long.